I hope you guys can hear me clear.
Yeah, sure, we can hear you.
All right. So basically,
Good afternoon.
what I'm going to be doing is I will just check. We'll just check some. Okay, we'll just check like two pairs and just leave. You understand? So we'll check if we have any setup for New York session right now, or okay, sorry, and we'll also check like what we think the week is going to present for us. Okay, so this is that near trade. So it's currently trading up into this imbalance and other block. Hopefully, let me see it up there. Anyhow, I wanted us to look at Euro USD and AED USD. So let me check Euro USD. Euro USD. Okay, so for us to find out the direction for the week, what you have to do is that you need to go on a higher time frame. Your first step is to go on a higher time frame. Okay, so that's the monthly time frame. So you want to see um what the market is presenting for you or to you on that time frame. So um what is the range that you are in? Okay, where is the discount level, where is the premium level, and where are the institutional reference points with respect to where price is. Okay, so right now we see that price has taken out a low here on the monthly chart. Who is this person? A low here on the monthly chart. Then we have this area is another block. Okay, so this area is another block right here. Bam. Potential bullish order block, and then there's a tiny imbalance. There's an imbalance there as well. Hold on, guys. Let me just mute my mic. Let these guys pass up here. Okay. So basically, we have defined that on the monthly charts, we have price is probably going to trade down to this other block, but before the other block, we also have this old high. Oh, these guys don't let me rest. I swear, these church people. We have a high here. Okay, so this is an old high here. So this old high might also make price react. You understand? So it's not as if price will not continue going to the low, but on the monthly time frame, everything is going to be quite powerful. You understand? So even if it only causes a small movement on the monthly time frame, that small movement might mean a lot on your 1 hour chart or your 4 hour chart. You understand? So that's why you want to define all these places that might have some kind of reaction, so that when you get there, you will not be holding a trade that is dangerous. Okay, a trade that will just make market move quite a bit in your favor, be against you. Sorry. Alright, so that's basically why we are outlining all these things. Okay, so moving ahead, Sha, we have noted the the stuff, whatever, on the monthly charts. Okay, so on the weekly chart right here, we have price moving progressively lower. Okay, price moving progressively lower. Okay, and the next institutional reference point we're looking at is just this old low here, this old I say old low, this old high that we just marked here. So that's the next reference point that we're looking at. So after that high, we have the other block on the monthly chart. Okay, so we want to look at our current range. Our current range. What do we have in our current range? Okay, what do we have in our current range? So in our current range, we have this candle here, we have another candle here. This place is this area here came to this breaker block up here. But what I'm going to do is I will just mark this place as a rejection block. Okay, so price might go up in there for retracing. By retracing higher, price may go up into that monthly monthly rejection block. rejection block. Okay, so we want to note that. We also have a fair value gap here. Fair value gap. That's a monthly fair value fair value gap as well. Okay, so that's the two major reference points that we've seen here. Okay, we also have a low sha. So this low can also be a target for us. We have an old low. Shall I say recent low? I just call it old low. Old low. Okay. So basically, these are the reference points we have on the monthly charts. And let's also mark the old eye, old eye. You guys can still hear me, sha.
Yes, we are waiting.
Okay, so go down to
Yeah.
daily chart. So right here,
But all these things that you are analyzing,
yeah, continue.
just want to say they are weekly charts. So is it okay to just limit it to any time frame?
You said
Like you identify them on weekly charts. You've moved from monthly charts to weekly charts. So all this monthly FBG,
okay. I was on
monthly
weekly
rejection
chart.
block.
Sorry, I should have
Yeah,
wrote.
then
I made a
you
mistake.
are weekly.
Oh, sorry. I was supposed to say weekly. I meant weekly rejection block. Sorry, I forgot I was on weekly chart. This is weekly. Everything is weekly. Sorry, everything is weekly. Weekly. This guy wants to party now. So that's weekly fair value gap. Weekly everything. Okay, so now we go down to the daily chart. So you can see that price has gone to uh we started moving up here. So we want to check. We'll bring out this our equilibrium and discount too. Okay. Bring out our equilibrium discounts and what is it called? Um Premium. Equilibrium discount and premium too. Okay. So basically what we want to do here is that we want to be buying somewhere in the discount. I want to be selling somewhere in the premium. Okay. So if we are buying in the discount on the daily chart or the 4 hour chart, okay, so we'll be looking to sell somewhere that is significant the um on the on the lower time frame. So for example, if I buy this trade on the daily chart, I will be looking to take profits somewhere in the premium area. Okay, so I'm buying it somewhere at the discount. Let me say I bought it at this other block area, okay, or maybe rejection block area. Okay, so let me assume that I bought it around this discount. Okay, I'll be looking to TP at somewhere close to the equilibrium or maybe as high as premium. Okay, depending on how long I want to take hold the trade. Okay, or maybe if it's day trades, I will be buying till I get to premium. Then I realize that okay, my trade probability has fallen short. So the since we are now in premium and also in bearish environment, we might see price fall lower. Okay, so basically what you want to do first is just to identify your reference point on the higher time frame so that it can guide your trades on the lower time frame and you know where you might expect some kind of reactions from the marketplace. Okay, so that's just the reason why we're doing it. All right. So I would also mark this place here. Okay, this place here. I'll mark it as a daily rejection block. It's a daily rejection block. Daily CRB. So we won't waste time. Okay, daily rejection block, and also we have We have another daily rejection block up here that coincides with the weekly rejection block up here as well. Okay, so we have another. Let me just clone this one here. We have another daily rejection block there. Okay, so now we have the price is moving into the premium area. Price is moving into the premium area. So um most times we are going to have the direction for the week, or let me say if the week is a bullish week now, from Monday, Tuesday, Wednesday, we are going to have the low of the week. Okay, most times Monday, Tuesday, and Wednesday, the low of the week is usually formed. Okay, or let me say if we are bearish, between Monday, Tuesday, and Wednesday, we'll have the high of the week. Okay, so from now till Wednesday, we're expecting the market to form the low for the week. Okay, so now we're trying to see where might the market, since we are momentarily bullish, we're trying to see is the market going to fall short from here. Okay, because even at this area right here, we have this mitigation block. Mitigation block is here. Okay, mitigation block is here. Then this place reacted as well. This place reacted as well, and then this is an imbalance on the daily chart here. This is an imbalance here on the daily chart. So we might as well have price just stop here and continue going lower. Okay, price might stop here and going continue trading lower. All right, so you keep moving down to see where you might have some um setups for me. Okay, so now that we're on the 4-hour chart, we now have, if we are buying somewhere in this discount area. If we are selling, we want to continue to sell somewhere in the premium area of the range. Okay, so we want to sell somewhere in the premium area of the range. Okay, so I don't know if I should delete this. Let me just leave it for now. Let me just leave it for now. Okay, so now we're on the 4-hour chart. We're now going to identify what is here that we can actually use. What is here that we can actually use? So first of all, first thing I can see here is that this is um another block. Okay, other block, 4-hour other block. Okay, 4-hour other block, 4-hour other block. And under the other block, we have something else. I don't know. Can you guys still see the something, or all the colors are confusing you?
Yeah, they are cool.
Okay,
You can see it.
all right. Then we have an imbalance here as well. Okay, for 4-hour imbalance. Let me say FVG, FVG, fair value gap. Okay, and I'll change the color of this one to something else that can have a difference between them. Okay, so now since the way I'm looking at the price, we have some momentum, and you can see here that a liquidity pool was taken out. So you have this was run out. So we have this liquidity here taken out. Okay, and then a reversal now occurred right after that. Okay, so that's giving me bullish signs. That's giving me bullish signs. So when we had this one, the team reversed higher and came into the breaker block area. Let me not mark the breaker block, else everything is going to look all messed up. Okay, so let's just leave that. So now, what I'm expecting from Euro USD now is that from Monday, Tuesday, Wednesday, okay, Monday, Tuesday, Wednesday, I'm expecting the low of the week. Okay, it might not happen on Monday, Tuesday, it might happen on Thursday, but I won't really like to trade in such a condition. You understand? So my ideal condition is if it's um predictably forms between Monday, Tuesday, and Wednesday. Okay, so I'm looking for a scenario where the price is going to drop down into this 4-hour order block. Okay, it might also go as low as coming down into this fair value gap first before continuing. Okay, but most likely it's going to drop into here. So if it drops into here and shows some bullish sign, or let me say if it drops into this place or this place and shows some bullish sign, we'll be expecting it to run higher. Okay, we're expecting it to run higher. Okay, we're expecting it to run higher. And where will it run to? It will run to one of the other institutional levels that I've marked out on a higher time frame. For example, this weekly fair value gap. Okay, this weekly fair value gap can be an example to run into that equilibrium area. So that might be where I'm looking to um close my buys for the week. Okay, so if price should come down here first, I might be looking to close my buys up here for the week. But if price will continue running higher, we'll be looking for maybe this imbalance in here. Okay, somewhere in this imbalance to take profit or something like that. You understand? So based on what the market will form as a low, okay, so we're expecting the low during the London session or New York session on any day of Monday, Tuesday, Wednesday. It can happen any day. All right. So we're just waiting for the market to give us to show us his hand. We're not just trying to jump in and out. Okay. I'm not trying to jump in and out. So this is not a day trading guide. Okay. This guide is just kind of like, if you are familiar with ICT's one shot, one kill. Okay, this is what it kind of entails. Okay. Basically, you're looking for um levels to sell to, okay, or buy from based on the range that the market currently is, okay, on the higher time frame. So we're trying to predict the range for the week. So let me just go up into a weekly chart to kind of gauge where the market might move to. So personally, I think the market might come down into this area, okay, come down and fill in the weekly FVG, okay, come down a bit and fill in the weekly FVG. So that's my opinion. That's what I think for now. Okay, so we're looking at the 4-hour order block and the 4-hour fair value gap as areas that might act as support for price. Okay, so on the 1 hour chart, we'll try and see if we can find anything interesting. Okay, on the 1 hour chart, we have liquidity up here, so many places, but basically, let me just end this analysis here. We are looking for some kind of support inside this 4-hour order block. Personally, I'm looking for some kind of support there. So if I look at the mean threshold, for example, if I look at the mean threshold of the order block, that will put me here, yeah, approximately. Okay, mean will be mean threshold. Okay, will be mean threshold. I'll delete this. All right, so somewhere around the middle, we might actually find some reasonable um entries. Okay, so you might not get the low exactly, or you might not get the low, but what you are just expecting is just what will the market do next. Okay, because honestly, nobody is ever sure. Okay, what they're trying to frame it on is um how the market is looking like on the higher time frame. So based on what the market is looking at on the higher time frame, you can now look at the lower time frames to kind of frame what the market might do soon. So if the market now does something similar to what you're expecting, you will now buy after it has played its cards. Okay, after it has shown us what it might do. Okay, so um so this is basically what I'm expecting on Euro USD. I'm expecting it to drop down into here. Then I would take a buy till maybe Thursday. Okay, my buys will target the closing of this weekly FVG, for example. So let me draw. There's a tool that is also available. Um, a Fibonacci extension. Okay, a Fib extension. So let me look at this range, for example, now. 1.2.
CGI.
Yeah.
Please, how do you know the figures to put in that those Fibonacci slots, like those numbers? How do you know the exact one that each box beside?
There's some levels we're interested in. We're looking for 1 point 1.27 and 1.61 and then 2. 1.27, 1.618 and then level 2. So level 2 means that the range times 2. The range times 2, that's level 2. So um the Fibonacci is not actually doing the whole work for us. Okay, the only thing we're using the Fibonacci to do is just to kind of define um hold on, let me just finish what I'm doing first. All right, so what we are using the Fibonacci extension tool for is that we want to look at any institutional reference point that lies around any of the Fibonacci levels. So if there's anything that lies around each of the Fibonacci levels, we might use that as a TP, as a likely place to TP. Okay, so that's what we're looking for, not necessarily that we're just looking at Fibonacci and taking profit there. So what the levels we're looking for is level 1.27, level 1.618 and level 2. Okay, so what that means is that if I put this area, let's say this is the range now from this top to this area here, that is the range. So if I copy it and put it on top of itself, how do I copy this rectangle? Let me see, clone. So if I copy it and put it on top of itself, okay, that will give us 2. Okay, so that's the range times 2. So what we're looking for now is to buy somewhere inside the range and then target all these levels as our TP. Target anything near these levels as our TP. So now you can see that 1.27 lies inside the weekly fair value gap. Okay, 1.27 lies inside the weekly fair value gap. Lies inside the weekly fair value gap. Okay, so I can use that. Okay, I can use that as a target. I think this place will also be like a breaker block or mitigation block. Let me check a higher time frame real quick. Let me check a higher time frame. There is kind of like a breaker block there on the daily chart, or should I call it a mitigation block? So how I'm going to play is that I'm going to take profit at um the middle, not the middle, at the end of the weekly fair value gap or inside the fair value gap, depending on if I see any significant reaction inside the fair value gap, then I will TP. Okay, but where I'm ideally looking to take my profit is at the end of the fair value gap. Okay, at the end of the fair value gap, then I'll look at this 1.68, this 1.68 here. It looks like it coincides with these highs, but then there will be something there on the 4 hour chart. I'm also being very, very wary of other blocks as well. Okay, so the 4 hour order block lies here. 4 hour order block lies here. Okay, and then the main threshold of that order block is very, very close to that 0.618. So what I will do in this case is to just TP at the order block. So this is another block on the 4 hour chart. One, then I'll TP also at the middle of this fair value gap, or let me just keep it at 1.27. And then the final TP for me for the week will be somewhere inside the premium. Let me say above this high. Okay, so um the chart is very, very rowdy now. Let me delete lots of things first. so that we can see clearly what we're trying to do. I think it's okay like this. Okay, so what I'm looking for this week now is if price should come down into this area between Monday, Tuesday, and Wednesday, okay, and then show bullishness or bullish signs. Then I'll be looking to TP, okay, at these levels, weekly fair value gap, other block on 4 hour chart, okay, other block on 4 hour chart, and then high on 4 hour chart. So this will be my target for a buy, okay, for a buy. But if I don't achieve all the three all the three targets by Thursday evening, I will close the trade. Okay, I'll close the trades because the team may continue to Friday, but um by Thursday most times it usually dies down and starts retracing a bit. Okay, so that is why I'll just target till Thursday. So if I can see bullish signs between today tomorrow, okay, preferably by tomorrow, okay, most likely by tomorrow, we can come down in here and show some bullishness. I would like to take profit at 1, 2, 3. Okay, so that's just my opinion and my bias for today. For today, so it might change depending on what the market might present. It might change depending on what the market might present. Hold up. Okay. For ADUSD, I won't like to go through, but let me just do a brief thing from the higher time frame. Let me just do a brief thing from the higher time frame. Okay, the higher time frame now we have this range here, okay, and we are heading towards here, towards here. I don't know, nobody has questions concerning the previous one. Are these people clapping? Ah, yeah. Ah, all right. So for this guy now, for this week, I'll just expect it to dip down into this rejection block. Okay, so this liquidity that is sitting below these bodies, I want the market to kind of come and see it, seek it. Okay, so um, before we seek that liquidity, we have a fair value gap that the market might close in. So the market might come into this high, okay, this low, and react there before running for that. Okay, so this is what I'm expecting. Price running higher a bit and then selling off. Price running higher a bit and then selling off down into here. Okay, so this week we probably have um a right here kind of in the middle of the range. We're kind of in the middle of the range. Kind of in the middle of the range. Yeah, we're very close to the middle. Okay, so let me not waste much time. This is already 2:30. So I want to see price either. I mean, what I want to see first is that price should run up and touch this previous low here. It should run up and touch this candle's low, okay, and then eventually come down to react at this this monthly level, monthly rejection block. Okay, so um that might be a little bit long term, sure, because that was a monthly chart. Okay, that was a monthly chart. So right here, what we see happening is that price has reacted from what looks like a sponsor candle. So it touched it a bit, and now it's looking to go higher. Okay, looking to go higher. So this week's range, I think this week's range is just going to try and fill up this thing, try and fill it up, just to go and touch this high. That's just what my expectation is right now, just to go up and touch the high. Okay, then for the following weeks, we'll now see price to peel down to get this area here, to come and seek this area here that has some liquidity, or that has the favor and the rejection block over there. Okay. Um daily charts, daily charts looks like we're running higher. So if we're taking maybe a what do they call it? OTE trade, like we did in our last live session. Let's say you're looking for the optimal trade entry. The previous days high that you'll be targeting is somewhere here, okay? So you look at the 5 minute chart and try and get an entry that will get you above that high. Try and get an entry that gets you above that high, because yeah, you can see that on the daily chart, we are already reacting from something on the weekly chart, pardon me. Okay, so on the daily chart, we're reacting from something on the weekly chart. So we might see price go and take that high. So if you go on the 5 minute chart, you'll be looking for an entry that falls between uh the 1:30 time to which time? 4 o'clock. Okay, so if any trade opportunity catches you between 1:30 um to 2 o'clock to 4 o'clock, we might take the buy to that high. We might take the buy to that high. Okay. And right now the market might even be setting such a trade up. Might be seeing such happening. Okay. This is another block here. This is another block here. Okay. If we do a Fibonacci 2 to see the um the levels, whether we are in OTE level, okay. So to see if we are in optimal trade entry areas, which is 61.8, 70.5, and 79 level. Okay. So if we do that, you can see that right now we have dipped down into 0.618, and this other block rests at 0.786 level. So I really like where how this thing looks right now. Okay, I like how it looks right now. So probably we might drop down into this other block in time. Okay, so our time window is between um 130, 130. Let me use the vertical line. Okay, so any opportunity to buy that we see from year to year, we're going to buy it to that daily high. Okay, so for me, I like this area here. It might actually run through it and take all these sell stops here as well. It might take all these sell stops here. Who knows? It might take all this. It might take all that. But I personally won't like to see that because of the session we are in. We're in a very sensitive area, so I expect to see some bullishness from here. Okay, even though we have a tiny something in here. Let me see how it looks. Let me see 15-minute chart. Okay, I think I like this. I like this zone. I like the zone. I think I like this zone. Let me see if we have 3 minute chart. Okay, okay. I don't know, my people. It looks good though. It looks good to me. So I'm dropping in there. I want to see some reaction. I want to see some reaction there. I want to see some reaction there. I'd like to see some reaction. Uh, trade idea at least something like this. So 7.9 pips stop loss, but I increase it to 10 for sake of um allowing the market to breathe. Okay, so 10 pips SL. Okay, 10 pips SL, 10 pips SL. Okay, so once we can see a, a breakout here, we will move our stop loss to break even. Okay, you can see a breakout here, move our stop loss to break even. I might even take profit. Okay, I think we even use that Fibonacci tool to even get the take profit targets. Okay, so um you might also look to the left to kind of see we are basically targeting the high. Okay, if you use this Fibonacci tool, use the Fibonacci tool. Sorry, I'm talking somehow weird. Is I'm a little bit. I don't know what's wrong with me. Okay, so if I have this range, okay, so we have our TPs to be I think there's a TP at one. Okay, one. I haven't forgotten the rules. Can somebody remind me? Where are we taking profit in this trade?
One 1.67 and two, right? You 1.27. Um, am I wrong?
I don't know now. I told you guys to watch ICT video. Did you even watch it?
You mean first scaling, second scaling,
Yes,
or what?
yes. Ó ti gbàgbé.
Yeah, something like that. Like,
Imagine. See my people. Anyhow, so you guys go and do the research. She now define knowledge. So basically, my eventual target is going to be. I hope this thing doesn't run from here. This thing might just run from here without entering this entry because if you look at the 5 minute chart,
yeah,
there's this tiny
exactly.
candle
Like, I
there.
don't think which.
There's this tiny candle over here that is causing problem. So I might even increase that entry because we have already entered 618. So I might have the entry. If you look at the candle, let me show you guys the candle. You can see this green candle that dip into the other block. Okay, so it dipped into this other block and pushed higher. Okay, it created quite an imbalance as it pushed higher. So it might also cause some trouble. So it might just rise from here. Even though I expect it to take a little bit of liquidity under that candle before running. But you might just put the candle as some accommodation for this trade. Okay, for this trade. So hypothetically, we have entered the trade. Okay, so I'll shift my SL now. Since I will leave my SL. a little bit closer now. So that will now be make it like 13 pips. Okay, 13 pips. The final target is going to be at uh, level 2 on the Fibonacci. We have different scaling levels, sha, but the eventual target is at Fibonacci level 2. That's double the swing. Okay, so if you now look at the institutional numbers that we spoke about on the last class, this the level 2 is at 0.66556. So I might take my TP down to 6550. Okay, so my profit will be 6550 as my final target. Okay, even though I'll take profit at different points before we get there. Okay, so I will delete this fib right now, and we'll watch how our hypothetical trade is going to do. So we might make profit on this, or we might lose money to just be another day in paradise. Okay, so let me see. Let me see if I can. Where did we stop in our weekly? Okay, now weekly range. Basically, I want to close the session right here. Basically, we're looking to trade up into the weekly fair value gap. Okay, I'm looking to trade up into the weekly fair value gap or partly into it this week. So this week, I'm expecting it to be bullish based on what I see here. I'm expecting a little bit of bullishness based on what I see here. Then from next week, we might continue to see downward movements. All right, so um, we'll be watching AUD USD and Euro USD to see if they are obeying what we would like to see. Okay, so on this trade, we have looked at um, a trade just for today. So this is just a day, like a day trade. So we should close this trade between today and tomorrow. All right. So either this trade will hit stop loss or TP between today and tomorrow. So it's like a day trade. While the analysis on Euro USD, right, on Euro USD, this one is kind of like for the week. Okay, so I'm looking at a one shot one kill scenario where we, we will come down into this other block area, look at find some bullishness there, and then run higher to the premium arrays into 1, 2, 3 reference points as our TP. Okay, so with that, guys, I wish you guys good luck and good trading for this week. We might have another meeting later.
Please, so yeah, I have a question.
Okay, please.
This ICT daily to 5 minutes time frame uh, entry point.
Yeah, I'm listening.
Can it work also on synthetic index like indices like volatility 75 and boom and crash?
I don't know. I'm not sure. I'm not sure because ICT doesn't trade all those, but basically the market is engineered using the same way, okay, using the same things. Okay, I don't know if the like
Okay.
this thing we're talking about right now. We have time and price theories for currency trading, okay, currency trading like the Euro USD, then also indices and other things. Okay, so I'm not sure if it's actually working synthetic indices. You have to go and back test. So maybe let me say you might back test like 10 or 20 days before. Okay, just back test and see if the market usually presents trade opportunities, that is pullbacks to run the previous day's high. If the market will present such an opportunity um during the time period of 1:30 to 4 p.m. So that's what we just go and do. I don't know about the synthetic chart, but I know that you can use institutional method like ICT methods to trade the synthetic indices, but I'm not sure if you can use this time and price theory on it. So that's what I'm not sure about.
Okay, thank you.
Yeah. So there's nothing else now before we
See,
close.
yeah,
Yeah.
please, I uh, my synthetic index account. So is it possible for me to move it back to financial account, like
Forex. Yes, now you can
currency
move
pair
it now.
account? Okay, it is possible.
Yes, I think Derive even has
We
some.
have to withdraw it from.
You have to withdraw it, but Derive has currency pairs now, don't they? They have synthetic indices
Yeah,
accounts. They
they
have
they
currency
have.
pairs account as well.
But
So,
yeah, it is different from the account. Is the two is different from each other. Like
mm,
you have to fund them separately.
wow. I thought they have this wallet.
Yeah, sure.
Like you have
The
a
two
wallet, like the way Hot Forex usually do. They have a wallet, then you can transfer from the wallet to an account, any account you like. But that's not how they're doing it again.
yeah they do.
You
Yeah, they
can,
do too. They do.
you can transfer it to the wallet and then from the wallet to the other account.
Okay, thank you.
Yeah. Or you can just check if synthetic indices works for what you're looking for. But anyhow, sha, it depends on you. What kind of move you want to make. So the move you make is the move that is going to make you money. So whatever is going to help you to make money is what you should do. Right. So yes. Any other person or any other thing from the person that just spoke? Hmm. Look at GU from last week. Even though it did not actually work out from this imbalance or the other block I marked out, but it came down to 1 hour order block before running higher. Okay, so nice, but it's still untradeable. Anyhow, with this, I'll close the session for today, and we can continue discussions on the group chat. So till next time, guys. Bye bye.
Bye bye.
Yeah.